Someone sitting in the shade today because someone planted a tree a long time ago. Wise words from legendary investor Warren Buffett that highlight the power of thinking long-term and letting your money compound. If you want to join the ranks of early retirees, living life on their own terms, decades before their peers, it takes foresight and strategic investing. True financial freedom doesn't happen overnight. You need to be planting those money trees today that will bear fruit for years to come. So what are those fruitful trees that can accelerate your early retirement? Welcome to MoneyWise Investor, your trusted source for financial information. And in today's video, we're pulling back the curtain on some of the less mainstream assets Buffett believes early retirees need to target. After spending over 6 months researching Buffett's investments, media appearances, and shareholder letters, I'm thrilled to reveal the inside scoop on 14 assets handpicked by the Oracle of Omaha himself that he believes hold the keys to funding early retirement. These are proven wealth builders that have stood the test of time. Assets millionaires have used for decades to grow their money. Alright, before we jump in, real quick, if you enjoyed these videos about early retirement strategies and investing, tap the like button and make sure to subscribe and click the notification bell so you never miss a wealth building upload. Now, let's get to it. Here are Warren Buffett's top 14 assets for funding early retirement. Asset number 1. Farmland. Farmland provides a built-in inflation hedge nearly unrivaled by any other asset. Here's why. As population rises and living standards improve globally, demand for food and crops keeps increasing. Yet the supply of viable farmland stays virtually fixed. This dynamic causes farmland values to appreciate over time. In fact, prime U.S. cropland has delivered 12% annualized returns for 30 years, doubling the stock market. You don't need to become a farmer yourself. You can easily invest in farmland by purchasing shares in publicly traded farming REITs. So don't overlook farmland as an early retirement asset. Its returns are rooted in a basic human need: food. As the world grows, so will your investment. Asset number 2. Value stocks. Of course, we can't discuss Buffett without mentioning value stocks, his bread and butter. Here's why he loaded up early. Value stocks provide a built-in margin of safety when acquired at discounted prices, and great companies tend to recover and flourish over decades. Value becomes growth. Also, maintaining capital allows you to be greedy while others are fearful. Swoop in during bear markets. In the 1960s, Buffett acquired stakes in Coca-Cola and American Express when others saw them as tired blue chips. His patience was rewarded with thousands of % returns over time. So don't ignore the stock market. Value stocks must be a core early retirement holding. Asset number 3. Luxury watches. Okay, now this one may make you skeptical, but certain luxury watches, especially Rolexes, have proven to be amazing stores of value that often appreciate over time. Demand for the most iconic Rolex, Patek Philippe, and Audemars Piguet watches continues to rise as supply remains tightly controlled. Wait lists are years long. So while stocks can crash 30% quickly, that Rolex Submariner on your wrist will truck right along, likely gaining value. A 5 to 10% allocation to appreciating watches can provide impressive diversification. Your returns won't correlate to the stock market's whims. So think outside of the box on this one. A prudently selected luxury timepiece is an excellent wealth preserver. Asset number 4. Luxury handbags. In the same vein, luxury collectible handbags became an early passion investment for Buffett. And how did this alternative asset pay off? Well-preserved luxury handbags reliably gain value over decades. Hermes Birkin bags now auction for as much as 500% over original prices. Limited editions hit home run status in the collectible community, creating huge demand. And bags from esteemed brands like Chanel exude prestige. They provide financial clout along with visual flair. By snatching up scarce bags early, Buffett knew he had acquired luxury assets primed to greatly appreciate over long periods of time. Patience is the key. Asset number 5. Lumber. As a building material, lumber has intrinsic utility tied to economic growth, yet it takes many years to grow trees suitable for quality lumber. This dynamic makes lumber prices highly sensitive to demand shocks. Sudden surges in construction send lumber futures soaring. For example, lumber gained 130% in 8 months in 2021 amid a home building boom. A small lumber allocation diversifies your portfolio and holds profit potential. You can capitalize on its explosive short-term supply-demand imbalances. So think beyond the obvious with commodities. Lumber can contribute to your early retirement. Asset number 6. Art. Paintings and sculptures from respected artists have been top-tier inflation hedges for generations. Contemporary art has achieved over 10% annualized returns for long stretches, doubling stocks. Pieces from artists like Warhol and Basquiat rack up millions in auction value. While art investing has barriers to entry, new platforms are opening access to fractional shares of iconic pieces. The point is, don't underestimate art as an uncorrelated asset class with reliable long-term compound growth. Asset number 7. Platinum. While gold grabs the headlines, platinum is actually 30 times more rare. It makes up only 0.005 parts per million of the Earth's crust. Here's why Buffett invested early. With annual production around 6 million ounces globally, platinum is incredibly scarce. All platinum ever mined could fit in a living room. Also, platinum has real industrial applications, like catalytic converters. This gives it a floor level of built-in demand. That's not all. Platinum serves as a store of value and inflation hedge like gold, but in more limited supply. Smart money knows that for true scarcity and value, platinum blows gold away. That's why the Oracle of Omaha invested early. Asset number 8. Silver. Another precious metal Buffett banked on early is silver. Though less prestigious than gold, silver has unique properties making it a savvy investment. For one, silver has been coveted as money for millennia. It's deeply embedded in societies across the globe, and it has wide applications including electronics, solar panels, and medicine. This gives it an industrial demand profile. And interestingly, silver is far more affordable than gold, opening allocation for bigger gains. 5 decades ago, when Buffett acquired silver stakes, prices languished around $2 an ounce. Recently, silver broke $20 per ounce and still has room to run. By investing heavily in silver early on, Buffett cemented his road to financial freedom. Patience truly pays. Asset number 9. Gold. Of course, we can't talk precious metals without mentioning gold, the king monetary asset and Buffett's ticket to early retirement riches. But why exactly did Buffett load up on gold early? Simple. Unlike paper money, gold maintains and even gains value over decades and centuries. It provides the ultimate insurance against economic turmoil and monetary debasement. But that's not all. Gold is cherished globally. There's innate prestige in owning hard money. Though not in love with gold's lack of yield, Buffett recognized its portfolio insurance merits. His early investment proved wise. Gold now exceeds $1,800 after starting around $35 per ounce in the 1960s. Asset number 10. Value stocks. Let's circle back to stocks. While risky, value stocks still warrant inclusion in your early retirement portfolio. Value stocks are shares of industry-leading companies available at reasonable or even discounted prices compared to intrinsic value. The key is buying quality businesses with enduring competitive advantages and proven management teams. Provided you hold for the long run, value stocks offer safety along with growth. Even if you retire early at 45 or 50, top value stocks still have runway to drive compounded returns for another decade or longer before you'd need to draw on that money. Don't abandon stocks out of fear of volatility. Embrace value stocks for safety and long-term growth. Asset number 11. Real estate. All of the assets Buffett utilized on his path to financial freedom, he credits real estate as the fastest wealth accelerator of all. Leveraging it through mortgages amplifies upside. A 20% down payment gives you control of a much larger asset. Also, a strong rental market provides growing passive income that can offset living expenses, and property values reliably appreciate over decades alongside inflation. When you combine income, appreciation, and leverage, it becomes clear why real estate turbocharged Buffett's early retirement. In fact, he's mentioned his only regret was not buying more real estate when he was younger. Asset number 12. Livestock. Livestock definitely seems outside of the box, but Buffett understood its inflation-resistant value early on. People need to eat, meaning demand for beef, dairy, and other livestock is unwavering. Herds and flocks grow over time. With the right breeding and care, they compound into more assets, and product offerings like wool, milk, and eggs provide diverse income streams. Back in the 1960s, when Buffett first acquired a Nebraska cattle farm, quality livestock traded for a few $100s per head. Today, prices approach $2,000. So while unconventional, don't ignore livestock as an appreciating real asset class that also churns out income. The value creation potential is outstanding. Asset number 13. Index funds. Let's move into the financial markets with a Buffett favorite, index funds. Here are 3 reasons the Oracle of Omaha loads up on these simple mutual funds. 1. They provide instant diversification across entire markets, like stocks, bonds, and commodities. 2. Index funds minimize costs. There's no high-fee fund manager when you simply track markets. 3. Long-term, the broad markets trend higher. Equity indexes grow 7 to 10% yearly over decades. Rather than pick individual stocks, Buffett knows most investors are better off buying the proverbial haystack through low-cost indexing. While not flashy, dollar-cost averaging into index funds builds serious wealth over time. Asset number 14. Yourself. Finally, Buffett's most recommended asset is you. Your mindset, knowledge base, and willingness to learn determine your investing skill. That in turn dictates your ability to grow wealth. If you dedicate time to advancing your financial literacy, you will make smarter money decisions for decades to come. Your wisdom will compound. Sharpening your money management abilities will pay off more than any other asset over a lifetime. So now that you know Buffett's secrets, which of these assets resonates most with you? Let me know in the comments. And make sure to like, share, and subscribe if you want more alternative asset insights on the path to financial freedom. Thanks for watching. Until next time, stay money-wise.